Ladies and gentlemen, Joshua Salvetti, welcome to another lesson of the High Performance Trader, right? So today in this lesson, I want to break down to you why trading continuations, trading break and retest is so much more valuable than trading reversals, right? I've been trading for a long time, guys. Listen, and I gave so much money away from trying to capture reversals over and over. So today in this lesson, we are going to break down exactly some of the reasons why you should stray away from reversals and start trading continuations, right? But before we go any further, ladies and gentlemen, check out the links below. We are putting in work over here, and you have to get involved with the team, with the Discord, right, guys? And the way you do that is by smashing that link below and coming over and checking out High Performance Trader Bootcamp, right? This is a lesson, an online course, 6-week program that you put in the work and you develop consistency by understanding the market auction, patterns, strategies, and philosophy it takes to get in and out of the market, right? We break down tons of extensive content in here. You have to get involved. We got tests, we got quizzes, right? It's not just a bunch of videos, guys. This is the real deal. This is gonna help you gravitate your trading to the next level. And not only that, learn to measure your success or your failures so that you can truly become the best trader you could possibly be, right? Look at this, $19.99 a month, right? Comes with Discord access, money back guaranteed. Get involved, Trader Bootcamp, link below, right? But without any further ado, let's hop into the charts, right? So the reason and purpose of this lesson is to help you guys understand why trading continuations, right, at least for me, in my opinion, is much more effective, right? Everyone knows I was a reversal trader for about 5 years, and I got cracked over and over and over, right? Because with reversals, you feel like you always have to be right. You have to predict, right? You have to understand, okay, buyers showed up here 2 weeks ago. I'm looking for them to show up again. Then they show up, and then sellers come in, and you get wrecked, right? Reversals are, listen, they're good to have in your bag, but they should not be your go-to, right? For instance, right here, pre-market low, we got 1, 2, 3, triple bottom, took the market long, crushed it. Very good. But I'm going to teach you guys a different approach to trading reversals so that you do not get caught in bull or bear traps, right? So basically, in a nutshell, what I want to go through is this right here. This is a perfect example. This was 8/2/2023, right? August 2nd. And this day provided a lot of opportunity if you were able to understand what was happening in front of you, right? So before we go any further, right, let's just break out 2 scenarios, right? Price is selling off immensely pre-market, right? You're getting a gap down, a very large gap down. This is a rather bullish scenario because anytime you get a very large gap down, this will be end of day over here at 456.66, right? You're gapping down very heavy and you are approaching a demand zone, right? So we have demand from pre-market low here at 451.62. Why is it demand? Because buyers showed up there very heavy, right? So yeah, you can maybe expect some buyers to come in there, right? So say you were going to trade the reversal, price comes down here, you get some volume, and you get a nice Bayesian candle, right? Everyone knows how much I love that candle. It is a pretty clear indicator that the market is starting to reverse, right? You had sellers, buyers came in, volume, you take the market long, right? And the thing here is demand's at 561.60 or 551.60. You take her long at like 552, right? So your stop loss is around 60 cents here to make a potential $2. Not the absolute worst trade, right? But you get caught in a bull trap and you get smoked, right? Bam, just took a loss instead of understanding market conditions, right? So now let's look at scenario 2. Scenario 2, right, is you're still looking to trade a reversal here, right? But price, you're going to wait for price to come into demand and you're going to wait for buyers to prove to you that they actually want it, right? So how do you do that? How do you sit stagnant and sit back and let the price action show you that buyers are in control? You identify a break and retest, right? Because if you can identify a break and retest, right, which is right here, the first break is 452.34, right? So I want to see a retest of this level. And if buyers defend it, I am now more bullish, right? I will then look for longs above this level instead of going long out of demand. Now, some people are going to be like, okay, Josh, I get that, but you're entering the trade late. Yes, I am entering the trade late, but I'm now taking a much more probable trade, because if buyers can defend that level, that at least shows strength versus just going long right out of demand, right? Not the most complicated stuff, guys. Just be patient and let buyers defend another level. This way you don't get caught in the bear trap that is going to smoke you boots, right? And it's really cool, because once you start to look at the market in a break and retest manner, right, where you're identifying critical levels, right, and you're seeing what happens in them, right? Once you can start to understand that, you can start to understand market conditions. And once you can start to understand market conditions, you can then start to trade with them, with trend, adapt to the conditions, and make money off of the conditions, right? So there was 2 ways to trade that. And now look at it like this. So say you were going for that move out of demand here, but price rips all the way up into 452.35, right? So once sellers defended this level instead of buyers, this would have been a clear indicator to then take the market short and trade with them, right? And if you'd done that, you would have absolutely crushed it. We took this trade in the Discord and made around 200%, right? So it's really your ability to understand quickly who is in control of the market so that you can continue to capitalize on the conditions of the market, right? We call this identifying and adapting, right? So, ladies and gentlemen, the reversals are great. I get it. And sometimes they are important, right? So let's break down this scenario, right? One more before we end this. So another trade was the day right after, right? Now, the way I want to set this up is we'll make this green line end of day, right, guys? Very important to identify end of day. It is always a clear indicator of who is in control of the market, and it's really good for entries, exits, and targets. All right, so we have end of day, and now we have previous day low, right? Let me just remove that, make a new one. So the purpose of this example is to teach you guys how to trade continuations off of a reversal. Okay, so once again, it's just a perspective, right? And you change your perspective, you change your life. Okay, so you have end of day over here at 450.48, right? And you're gapping down below, right? Now, if we can find buyers here, I would like to see a move to the upside, closing the gap, right? Gap fills are usually pretty probable. So price comes down, makes pre-market low over here at 458, we'll call it. So then price comes into 458, rips up and kind of consolidates, comes back down, and then creates this little, let's put about the 2 minute because it shows it very well. But then we create an intraday level. And the way I want you guys to do this is identify a level, right, that was previously resistance. So we got this level here. This was a little resistance. Okay, so price comes down, bounces off demand. You get a nice double bottom, right? Take the market long here, making a higher high, right? But then say you wait a little bit and wait for it to paint its picture, right? And then price then breaks this previous level. This would have been a very good entry on this long, right? But say you still didn't like that, right? I'll show you how I traded it. The way I traded it was off of high of day, right? Now you have high of day over here at 449.21. Price rallies into high of day, right? And now I want to show you guys something very important, and that helps me out tremendously. So if you whip out the 1 hour chart here, you're going to understand conditions a lot more bullish. So price rallies here. Let's get rid of pre-market data. It's going to clean it up a little bit. So you have this gap down, right? And now you get this massive green candle, right? This is what it looks like on the 1 hour. Now your buyers are just ripping right past high of day and come down, and they're consolidating, right? This is my all-time favorite trade, guys, where supply turns to demand, right? So instead of rushing and feeling like you have to catch the perfect move out of demand, let the market play out. catch the most probable trade, right? I took this long at high of day, right? And I captured an 80% move to the upside over here just by being patient. Super stress-free trade. Because I knew because when you take these trades long or short, you're literally risking pennies here to make potential $2, $3, $4 moves, right? Your risk reward is so it's not even there, because when you go long at high of day, right? Say you go long here at 449.30, right? My stop loss was at 449. I risked 30 cents here to make a potential $2 move, right? So basically, the point of this lesson is to help you guys trade continuations instead of reversals, right? And once again, I'm not trading reversals. I'm just trading continuations, right? One more example before we wrap this up. And I called all these trades out in the Discord, and they were phenomenal. The whole team is starting to understand that reversals aren't the way to go. And it's not that we're not trading reversals. It's that we're trading reversals as continuations. We're waiting for them to make key critical levels and then trading accordingly, right? So let me just delete all this so I can show you guys how I map this out. Okay, so this day we caught two different trades. We caught a trade here, right? And then we caught a trade to the downside, closing the gap, right? But the way I want to play this here is, how did I trade this day? Okay, so price comes right down into end of day, which literally, this was a perfect end of day rejection. If you guys aren't familiar with what end of day rejections look like, I highly suggest that you go check it out and learn, because end of day rejections are going to help you absolutely crush the market, right? And basically what they are is when price comes into end of day and price rejects, look at that, to the T, look at that. Price literally tags end of day and rallies. So we have two levels over here. We got pre-market high and we have end of day. And the next level I want to identify here is previous day high, which is always a very good indication, because if buyers can defend this level, that usually means you're going to get a nice trend to the upside. If buyers can't defend that level, it usually means you're going to get a trend all the way to the downside, right? Same with previous day low, two very important levels. Okay, so the way we traded this is we first caught this trade to the downside, capturing the gap fill, crushed it 200% in the Discord, absolutely demolished it. Check it out. This trade was amazing. We called it out. It was perfect. Where was it? I think I put it right. I'll just show it right here. Right here in profits. Bam, right there. 207%, perfect gap fill. Bam, right? As you can see, no pre-market data. It looks extremely clean. Great trade, right? But let's break down the continuation. So price comes right into end of day here, makes a perfect Bayesian candle with volume, right? Check out the volume, tons of it coming through. It's exactly what you want to see. Then you get a lower high, right? This is also a very bullish indication that price is making a reversal. Next, how can I understand buyers are in control and take a more probable trade to the upside, right? Now, there's a couple places you could have done it, but once we held this previous resistance of 44974, came down for the retest, this would have been a great area to go long, but I wanted just a little more confirmation above prior day high. So look, I'm literally sitting back $2 before I hop in this long, right? And I really hope this helps you guys get a little more perspective on how much price action moves next time you want to get out of a trade, right? Because if you take end of day long and you make 30%, you want to get out, in this scenario, you left about 300% on the table, right? So we have yesterday's high over here at 450.72. We end of day rejection, reverse. We break above yesterday's high, come down for the bull flag reversal. Once again, supply turns to demand, right? Look at that. Perfect area to take the market long, which we did, capturing a $2 move to the upside, right? So guys, ladies and gentlemen, you do not have to be the first buyer. Instead, I highly recommend you stop being the first buyer. Being the first buyer at a reversal is costing you your dreams, money, and your family, right? Guys, you could be making way more money not being the first buyer, right? So look at this, previous day high, literally waited for price to get above it here. And we bull flagged above it, chart pattern in zone, took the market long, targeting supply, absolutely crushing it, right? So ladies and gentlemen, I hope you love this video, right? Like, subscribe for more content. Get involved, Trader Bootcamp, $19.99, link below. I'll see you there.